What is going on, guys? Welcome to next week's gold forecast. Before we get started, if you could please like the video and subscribe to the channel, it helps a lot. I would really appreciate that. Okie dokie, with that being said, let's jump down onto gold right here. So what's the first thing we can see? As usual, every week, got this bullish impulse leg. And the only reason I repeat that week after week is because I get new people, watching these forecasts. So we always want to start with direction candles, direction candles, direction candles like this to build that story. So what have we got here? Bullish impulse leg on the monthly. So we are bullish on the monthly. Now let's jump down to where the candlesticks are. Here, let's mark out the monthly low and the monthly high. That is our monthly trading range right here. We have liquidity down here. We have liquidity up there on the monthly time frame. However, with this candle sitting in the middle of this range, we pushed down a little bit from last week, which is nice, but still, there's no real indication of where price could be going next. We could say, oh, bearish candle, we might be going to attack these lows, but there's no indication of that. So we need to go down the time frames to build the story. So what have we got here? Weekly. So again, weekly is bullish. So we've got the monthly bullish and the weekly bullish. Retracement, continuation, retracement into here. And then we've got a failed high here. Price tried to continue here and failed. Got like 50% of the way, and now it's retracing again. So that could be an indication that we are going to go and test this low again here. But it's just an indication. There's nothing we can look at there and say, oh yeah, price is going to attack that low. We don't have that confirmation yet. We just got to keep in mind that the monthly candle's bearish and the weekly candle's bearish, but the price action is bullish. So if we look at the current weekly high low, which tomorrow will be the previous weekly high low, mark our range. And I've got a pretty small weekly range in here. If you look at this, I mean, it certainly looks like a couple of hundred pips, 200-300 pips there, which is nice because we've got liquidity above, liquidity below, and we've also got the previous week low and the previous week high up here that didn't get taken either. So we've got liquidity on all of these levels that price will attack. And it's those levels that we're going to look for confirmations, either for retracements or continuations. So with that being said, again, looking at this weekly candle, what have we got? Price is going to open up here. Now, if we open up bearish and we swipe this liquidity here, just this one here, or we swipe both, and we get a confirmation for buys down here, the price closes back in, we get a nice reaction there from the liquidity, I'll be looking to buy up. If price opens up bullish and we take this liquidity out first, I'll be looking to sell for the rest of the week. If this happens like Monday, Tuesday up here, then I'll be looking to sell for the rest of the week. Obviously waiting for confirmations, of course. If we break and retest above here, we'll be going to attack this next level, etc., etc. We break and retest below here, we'll be going to attack this monthly liquidity down here that we looked at a minute ago. Okay, if we go down to the daily, what can we see? So the daily is bearish. Because what can we see here? Got this, a bit messy there, but we'll go low to high. And again, a bit messy here, go low to high. There. So what have we got? Breaker structure down here. And this breaker structure came from this high here to this low. So you see here, we've got daily high, daily low. So we are bearish on the daily. And you see here, and we're going to mark up our... You can see here, I'll leave the lines there. I'm going to mark up our daily range here. So daily high and daily low. We've got a small daily range here. But what are we expecting with the daily bearish? I'm going to expect, we've got breaker structure down here, breaker structure here, retracement. We're going to expect a continuation somewhere down here. And if you look, we have got an imbalance below here. So that is a very nice zone for price to target. So that lines up with our weekly idea a moment ago. If we take out these lows here at the beginning of the week and we mitigate this imbalance here, so we take out this liquidity imbalance, we get a reaction from here, boom, we're going to look to buy up to this liquidity up here, to these highs. Price will buy up here. And what can we see here? Ah, yeah, under the supply zone here. So you see now we're building the same story on the lower time frames, but it makes sense on the lower time frames because we can see imbalances and more of the price action. So again, if we open up bearish beginning of the week, if we take this daily low out and we take this liquidity out, I'm going to be looking for buys. Reactions for buys either from here up to that high. If we take out this low, we're looking for reactions for buys, up to this high again. If we open up bullish, so if we don't take these, if we take this low out, the daily low, the range is quite small. Don't really care because that could happen at market open, and I'm going to wait until Monday morning, pre-London. So if we take out this low, whatever, but we open up bullish up here, I want to see this imbalance fill. This imbalance fill here is beautiful because it lines up with everything we want to see for a continuation. For this continuation, the higher time frame continuation. We've got imbalance there. The imbalance is sitting in the daily demand zone, nice reaction zone. We've got all this liquidity here. If we see a little fake move beginning of the week, price come up here, give a reaction, bam. That's what I'm going to look for there. I'd love to see that move. And that's the zone we're going to aim for if price does the reverse. If price takes a low first, we're going to aim for that zone. That's going to be our target up here. And then we're going to obviously jump out of that trade because we're bearish. And then we're going to look for reactions and continuations there. But I'm just going to delete some of these lines. It's getting a little bit messy. There we go. Okay. So let's go down to the 4 hour. We'll draw it up again in a moment. What can we see? We've got the imbalance up there. Look, very, very nice. We've got all of this liquidity up here on this daily high. You can see this is all liquidity up here that will be swiped. And what are we? If we're on the 4 hour, what are we here? We are bearish. We are bearish on the 4 hour. So what we're expecting, like the daily comes down, continuation. We're expecting bearish, and we flip back bullish here. It's consolidating though. It's ugly. And look, what have we got here? Consolidation, break of structure here. And then we're bearish. We're in this bearish 4 hour, ugly kind of consolidation, wants to be a continuation price action. So what have we got? Let's delete that. We've got our imbalance up here. So I would love to see, if we see a fake of this low, we can see this. Take that liquidity out, beginning of the week. We're going to look to buy up to this zone up here, of which then we'll look for reactions to go to the continuations. If we, we sell off and we take both these liquidity out, we're going to do the same thing. Again, we're in for the buys up to this zone here, and then we're going to look for those higher time frame continuations. If we open up just bullish, if we didn't take them out, this is the zone. This zone here is my POI that I'm going to look for those higher time frame continuations on, right there. Now, if we break above here and we break and retest above, whatever, up here or up here, then we'll look for buys. But what we're looking at here is price action and what we can see. And this is the highest probable zone here for continuations. Liquidity there, imbalance fill, high time frame continuation, all of the time frames lining up, the daily, the 4 hour, the 1 hour, etc. Very, very nice zone. See here, look, we've got liquidity down here. So if we push bearish first, I mean, again, lower probable, but we could just continue, break and retest, and continuations. And I will look to trade all of them. That's what I'm looking at this week. There's not like one thing I'm looking at, oh, yeah, we're going to take that. No, these are all levels, and these are all liquidity. We're going to get reactions from all of these zones. And if we get reaction from here, we've taken liquidity out. So that could be the move that's going to take us up. We get in, manage the risk. We look to trade up, take our profit, 1 to 1, 1 to 2, 1 to 3, however you like. If we break down here, and again, we fake this liquidity, fake up, there we go, we'll buy up again. Take the buy from there. How big is this range here? This range is 50, 60 pips. So on the lower time frames, we could look, if we get a little break and retest here, we could trade this range here. These are all levels. You're either going to get a breach, or you're going to get a break and retest. You're going to get a continuation, or you're going to get a fake out on these levels here. Liquidity, so it's going to give us reaction. Either way, buy, sells. So this is what we're looking for. These are our zones of reaction. Okay, 1 hour, what have we got here? So inside the 1 hour bearish, leg here. So what can we see? Again, we've got a couple of nice zones here. Here, look again. The same on the lower time frame. So this is a nice zone I'm going to aim for beginning of the week. Let's just delete these lines. See here, bearish, liquidity sitting up here on the daily high, which is going to be the previous daily high when we get to Monday from Friday's candle. See, look, this, beautiful. If we fake the low, bam, we come up, we look for sells from here, down to the low. If that gets breached, then we're going to wait for this liquidity to get taken and reactions from the higher time frame zone and take it from there. You see, that's what we're looking at. Levels, liquidity, and what makes sense, because that's how the market moves. The market targets zones of liquidity. So you see here, this will be the target for here, that liquidity, and then price will either react and reverse, or it'll breach and take this liquidity, and then it'll react and reverse, or it will continue down. And that's all we wait for. Obviously, if we're trading on the sell side, we're on the side of the daily, the 4 hour, and the 1 hour price action. So we're going to be looking to hold the trades for longer. If we are trading retracements on the buys, we are going to look to take profit. We're not going to look for them to run, 1 to 4, 1 to 5, or anything like that. We're going to get in and we're going to take the profit and we're going to get out because we're expecting sells. But price also has to pull back. So if we get reaction there, we're getting buys, boom, take our profit out, wait for the sell, try get in for the high time from continuation, boom, catch the larger move. Okay, that's it, guys. Thanks for watching. Remember, let's go over to the Discord. We have the automated prop firm passing and payout process here. I have the live trading every day, live manual trading, which is very good, especially for educational purposes for people learning to trade manually. So I'm live. I go live 9 a.m. Dubai time every single day. Not the weekends though, just Monday to Friday. And that's not just trading. That's also for support as well. So if you need help or anything like that, setting the robots up, going through the process, there's always somebody there to hold your hand and answer your questions. And guys, if you're not in the free Discord, go over to blackswanfx.com, blackswanfx.com, and then click the link to join the free Discord right here. Get in the free Discord and you can come verify all the results right there. That's it, guys. Thanks for watching, and I'll see you, hopefully, if you're not in the Discord, next week. Bosh.